Let's have a chat about how building societies can attract Gen Z consumers in the current economic climate. I instantly go into this thinking tech, first off. They all, Gen Z, everyone's got a smartphone. Everybody's got that expectation now of how they interact with suppliers of services. So yeah, it's important for building societies to reflect that nowadays. Yeah. Certainly up against some of the challengers and neos and bigger players in the sector.
Yeah, tech's always the answer. People always say tech's the answer. And I think it is to a degree to facilitate the products that they take to market. So some of the tech stacks, you'll know this, obviously Mutual Vision have a number of building society customers in the UK. The tech stack they're operating on with yourselves and the products they offer are traditionally mortgages and savings. Mm-hmm. Mortgages is a low touch product. A lot of Gen Zs, or maybe people are not even on the property ladder yet, still saving. So even with technology, you're not going to attract them to use your building society to look at your mortgage balance. Who wants to see minus 200 plus thousand? It's not the best read. But looking at the savings aspect and how you can work it with maybe pots through an app, certainly, but also through a technology change, they could launch new products such as a current account or loans or different types of savings products that are linked to something else. So I think technology is the facilitator to enable them to go out to that new market, to keep footfall coming, whether it is through a branch or whether it is through the app. The technology needs to be across all of them to get that product out there.
It does. I was going to touch upon that myself as well, because the branch network, obviously building societies are proud of it, aren't they? And the fact that they still have that presence on the respective high streets, regionally. And but if somebody's going into a branch, it still needs to be a good experience. Yeah. They can't get the paper out in a branch, can't they? So, but that's where tech also plays that part. Yeah. They need that customer experience to be on it. You touched upon the products as well, and I think that's because obviously we're talking about the current economic climate. Times are hard for some people. Getting onto the property ladder for Gen Z is difficult, and it's really important for certainly the smaller building societies to be offering those more niche products reflective of the community, so that they're making products that are accessible to people, as opposed to the mainstream lenders that may not be, because they don't need to be. That makes sense.
Well, when you think of the savings pots, it's not just your 1 year, your 2 year, your ISA. Spice it up a little bit. It could be, there's, the pots, the goals, are there incentives for each time you reach a goal that, you might get a rate boost at when you hit 5 grand, 10 grand, 20 grand. All of these things will encourage people to come to you. Yes, you might do a kicker on the rate and there's the cost to think about, but it's just something new in a market that they can't do with the stacks they've got now. Yeah. They need, this modern SaaS cores with the MV Solar wrapped around it to give all the functionality that allows them to then go to market and say, here's something completely new. Yeah. And others will then look at it, and it can be regionalised. It doesn't have to be the entire UK. Regionalise it, bring it to your local community, which is what building societies are good at.
Yeah, absolutely.
So Mike, what do you think are the considerations that building societies need to make when they're looking at their core technology and all in all technology stacks in their institutions to compete with new entrants, the banks, new FIs or non-bank FIs coming to market?
I mean, building societies and all institutes nowadays, aren't they, are trying to leverage the abundance of fintech that's available, and all those different products and solutions that are out in the market, which ultimately makes for a better consumer experience, need to hook into that core platform. And traditionally, if you go back to core platforms that may have existed for some time, that's quite difficult. Mm-hmm. And increasingly now, people want to be able to link in all the different pieces of technology, but for that to be as frictionless as possible. I know you guys talk about composable architecture and composable banking, and that's exactly what people need to be thinking about nowadays, because you're not going to go and get all your solutions from one supplier. The monolithic systems of the past are of the past. So you've really got to be thinking about making sure you've got a core solution that supports that connectivity and that frictionless user experience, to make sure that you can leverage all the benefits of this great fintech that's in the UK and wider, and make sure that it works with your core systems.
Yeah, I think it's bang on. What we see and what you guys are doing, what we're doing in the market, and what lots of others are doing, is there's a technology solution out there for everyone. We may not be the answer, you may not be the answer. That's why there's competition. It might be someone wants an end-to-end solution, all in one, or they might want components. They might want some components from Mambu. They might want some components from one of the originators out there. They might want digital banking from somewhere else. I think what they need to think about is what are their capabilities internally to deliver that change, to compete. Because it's all very well and good saying, I want the shiniest thing out there. If they haven't got the skills, not even the skills of the capacity, because they've got BAU to run. They need to be able to serve their customers whilst transforming. They can't just shut the doors and stop and do a project, because then before you know it, they're out of the market. So certainly looking at how they do it, how they deliver it with, is it a delivery partner? Is it a managed service? Is it, the technical one component? It's certainly what they need to look at, because ultimately that technology stack, as we touched on earlier, that will deliver a product that will land in the market well, be smooth, user-friendly to their customers, which will get more people coming to them and talking, and then they'll grow. And then as they grow, they can offer more to the market because they'll have more funds coming in and able to do more. Yeah. So I think it's definitely not just what they have today and taking a newer version, which I think a lot of people do in the market. We see it, whether it be a bank, a building society, or an FI. I've got something today that's 20 years old, I want to get a newer version of it. Brilliant, it doesn't change the way your business works. No. You will just do the same thing on a slightly newer version. Dare I say, like an iPhone. Yeah. 11, 12, 13, you're just getting the newer version with a slightly faster something inside it. It doesn't fundamentally mean you can do more with that. And I think that's what needs to be considered. And it might be that some of these building societies or banks or credit unions, whoever they may be, that's right for them. But some of them who have got the ambition to go, I want to go and do something different. I want to grow, not my 3 or 4%, I want to grow 15, 20, 30% and increase my customer base and reach. That's where they need to think about the tech stack and how they deliver it. Yeah,
there's a couple of things you touched on there, and the making sure that organisations are, their understanding of their abilities around tech and what they can and can't do. Because you're right, everybody wants the big shiny thing, and might point at challenges and some of the bigger institutes and think, I want to do what they're doing, but not necessarily appreciating the amount of effort and resource that goes into that. And obviously, what we're doing at Mutual Vision with MV Solar in terms of we're wrapping, we're doing that build almost so that it's available off the shelf, with options around composability. So you can, if you want to use a different origination platform to ours, then that's fine, and we can plug that in for you or help you do that. But that's us reflecting the fact that people want the composability and the connectivity of all the different systems that they might want to choose for their organisation, but they can't necessarily facilitate the connectivity themselves.
It's giving them the path to modernisation without having to find the budget to recruit 100 people. Because that's the other thing, the BAU is an issue. You and people like yourselves have that team who can come in and say, well, we'll do this for you. You run your BAU, we're going to help you work with it. They've still got to give you something, but they have to understand what is it they're getting into, and not just what they're getting into, but is that tech stack right for the next, not just 5 years, which may be their reign as a chief exec or chief product or transformation director. Is it fit for purpose for the next 10, 15, 20 years, because it goes beyond them in that role. They have to look at a tech stack and a solution that will be still fit for purpose in 20 years.
Absolutely. I've had this challenge recently from customers on obviously today, people moving from older solutions into modern tech, there's a migration event that people are everybody's always nervous about, because there's lots of examples of where those things haven't gone so well in the past. I was challenged that will we ever need to do migrations again into the future? I said no, so long as you choose the correct tech stack now, because if you properly go down the true cloud microservice architecture, composable solutions, as you guys talked to as well, then actually in the future it's not big bang. It's just evolution around all your different components, and yeah. So to your point of, you know, the solutions that you choose today, you should absolutely be thinking that these are the solutions that will be in place for the next 20-30 years, because there's no reason why that shouldn't be the case.
No. And there's some of the things we're looking at on our side at Mambu, which we've already got live today. Cross-cloud DR, perfect example for operational resilience, which is a hot topic.
There's a strong focus, isn't there, around the regional aspects, around community, and how they'd like to stand themselves apart from maybe the larger FIs and banks that are out in the market as well. We certainly see that our building societies pride themselves on reflecting the needs of their community and going to market with products that you know, are addressing specific needs, and you know, in a way that obviously the let's say the national players don't do, because they don't need to, and they obviously don't understand the very niche pockets that a lot of building societies operate in. Yeah,
I think, as you say, the larger organisations, vanilla product set that's global, direct to consumer, broker led. I think the building societies and the way they operate, I love their model. It's regionalised. The branch is probably the standout thing for them. The standout feature is they've still got branches. They're in their community. The people who live in that community work within that, you know, building society, whether it be head office or in the branches. It brings a community feel, and they do good in the communities with, you know, charities. We see that. So the way they differentiate is interesting, because from a mortgage perspective, a lot of them are still national. The brokers will know that on a mortgage side of things, they'll do it, they'll underwrite it in a certain way, they've got a certain criteria that lands well. So you've got a national reach on the mortgage aspect through the broker channels, but direct to consumer, it will be a regional traction that gets them through the door, maybe speak to a branch advisor. So they're dipping in and out. They've got the best of both, but they could really scale up through that broker channel if they wanted to. The deposits will obviously be different. Again, you might see them on a best buy now and again on a comparison site, but probably not. It's more the local community would put in their money into their building society via the branch, and it will spread out, as we talked about earlier, via technology, through apps, things like technology, digital self-serve, like Mutual Vision offer, which is, you know, you've got your web, you can go in, you can open your account. So for me, the building societies are that regional footprint. They are a form of that. And you can see that. You look at Stafford Railway, when you go in, you see Stafford Building Society. They've got the big banks all around them, and then they're in that, you know, the courtyard. It's brilliant to see. They've still got the footfall, they've still got the queue at the door before they open, because people are using them, whether it be with a passbook or whether just because they've got that community spirit and people are more engaged. If
you go back, we were talking earlier, weren't we, about the Gen Z side of things, and you know, I defaulted to talking about technology, but actually I think our societies are reflecting back to us that increasingly the high street presence is a thing for everybody, not just you know, maybe people who have had that experience for longer, you know, and the fact that you can go in and talk to somebody is increasingly appealing, because we've all, you know, things like chatbots and you know, things like that are great technology, but every so often you just want to go and talk to somebody, and they all absolutely pride themselves in that. And you reflect on Stafford there. I always think it's true of all of our societies when we go out onto the high street and visit them. They have got that presence alongside the bigger players, but there's always people in the branches, and you know, there's always, you can hear the level of advice and conversation that's ongoing that you don't get if you're dealing with maybe a big national.
Well, it's too easy to transact, and that's a great thing. You know, there's a model for everywhere. They've got the TV ads, they've got the apps, they've got the banner ads, they've got the marketing out there. That means if you want to do something quickly, bang, do it. You want to open up a current account, we all know that Monzos and Starlings, you can open it up in minutes on your phone, but they're all switching on to that. When it comes to that relationship of speaking to someone who you might know, or you go there because a family member once went there and opened you up an account when you were younger, that's where the building societies are well placed to kind of grow and offer more through services. But yeah, I think it's that their USP is purely, we are here with a great product set that can fit the market. They can do more. I know I've worked and talked to lots of them in the past. They could do a lot more perhaps with the right technology stack, which is what's your postcode? Does it trigger a certain product set with a certain rate or a certain LTV? Because we now know you're in that, and they could do that automated online with the right technology stacks if they wanted to. Again, the accelerators, I want to buy a home here, here's your goal on your savings product. Right, well, you're buying a home locally, you're saving locally with a building society, here's some incentives. There's lots they can do, but they're well positioned, and I think it's great that they're still there and they're striving. They're doing really well.
Yeah, we should maybe talk a little bit around that use of data. That's something that I'm...
Well, exactly, and again, the modern tech stacks they have will open up data to them to be able to see, well, we've got 10 people who live within 5 minutes of the branch who are saving with us to buy a house. Why have we approached them to go for a mortgage, or are they going to end up going to the big bank next door who have got a more vanilla product? Well, actually, maybe there's something they can link it in. So I definitely think, start using the data more, and the footprint will grow.
Yeah, it's fundamental, isn't it? There's so many, I mean, we run core systems, as do you guys, and there's so much data in them that people don't necessarily look at, and when they do look at it, it's more of a verification exercise. So yes, we are doing what we think we're doing, but not necessarily looking at it to then change behaviours or do new things or do different things. That's something that I'm a bit passionate about when it comes to it, because we've always got so much data in systems.
Exactly, and does the data say we've got 5,000 mortgage customers, or does it say we've got 5,000 mortgage customers, 3,000 of them live locally, and some of them also are looking to do this, or do we go deep enough in the data? Can they do it, or is it the next step? Could well be.